Want to take your financial management to the next level? In this video, I'm covering the 10 golden financial management rules that every successful budgeter, and to be honest, business owner uses. Let's dive in this video. Hey everyone, welcome back to the channel. I'm your host, Justine. I'm a personal finance educator and enthusiast. We're talking about 10 golden rules to financial management that is really going to set you up for success. And the first rule is organize your finances. Listen, we know we have a lot of accounts, from checking, savings, credit card accounts, retirement accounts, brokerage accounts. There's a lot to manage. So organizing it using a budgeting software, financial software system that's going to help you organize things, make sure that you make on-time payments, is going to set you up for success. Number 2, spend less than you earn. This is huge. It sounds so simple and so easy, and in all reality, it can be quite difficult for many. As long as you are tracking everything from that first rule, then number 2 should be relatively easy for you to do. And once you learn how to track everything, then you can control where the spending is coming from and how to reduce it. So living by this golden rule of spend less than you earn is really going to set you up for success in the long run. Number 3, put your money to work. And do this early and often as possible. For example, a 21-year-old who invests $17.50 a day until the age of 65 at a 5% rate of return can be a millionaire. Now, if you're a 30-year-old, you would have to nearly double that savings amount in order to hit the same goal. And if you're in your 40s and you start at the age 40, that savings amount quadruples. So really, that power of compound interest can really benefit you if you start early and start investing and saving often. Number 4, limit debt to income producing assets. What I mean by that is when you take on debt, for example, you take out a mortgage for a rental property in hopes that it's going to produce income for you later on down the road. It's actually going to pay you back from that rent so that you can pay for your mortgage on the rental property and then pad your pockets a little bit from the additional income that you're making every single month. You can't do the same thing with your car unless you are into classic cars and they hold their value over a long time. Think about any time that you're spending money or taking on debt to acquire an asset and how that's going to produce money for you in the long run. And the important thing to note here is when you borrow to make purchases that aren't earning you money, you miss out on a lot of opportunities. Number 5, continuously educate yourself. Thanks to the internet, the knowledge of Wall Street is at our fingertips 24/7. So from books to blogs to videos such as this one or podcasts, growing your financial literacy and educating yourself on how to be a better money manager for your personal finances is going to take you a long way. Number 6, understand risk. And risk, when I think about risk and financial management, I'm really thinking about it in terms of investing. So the general rule of thumb is the higher the risk of a potential investment, the higher return. This is what's called the risk-return trade-off. So think about investments like stocks, particularly single stocks in a particular company, where if you are really going all in, you are risking that something could happen in the market with the potential to lose the money that you invested in or your principal. Whereas investments in things like a money market account or a certificate of deposit have a very low risk, thus a low rate of return. You're not going to really lose out on your principal, but you're also not really going to be earning a lot of money on that investment either. Since no one can predict the future, and trust me, there's a lot of people on Wall Street say that they do. They don't. You cannot be 100% sure of what's going to happen to your investment. The important thing to note here is that you do understand your risks of your particular investments and then diversify it. Which leads me to number 7. Diversification is not just for investments. Learn how to diversify your income. Everyone has a skill set or a unique talent that you can earn money from. Whatever you are doing at your 9 to 5, where a company is paying you a full-time salary for, you can also do as a side hustle or as a contractor, as a freelancer. There are multiple ways to diversify your income, whether it's picking up a side job, earning overtime, or just finding ways to make money from home. You'll appreciate being able to boost your monthly income with a little bit of a side hustle that's also going to support your lifestyle. Number 8, maximize your employment benefits. This is a huge one that I think a lot of people overlook. So when we're talking about maximizing employment benefits in order to really be a successful financial manager of your finances, we're talking about maxing out your 401k, setting up a health savings account or a flex spending account, really understanding your employer's sponsored health insurance plan if they have one. In fact, my husband and I went and looked at his health insurance plan because he supports not just himself, but me and our daughter on his plan. We found out that we're only paying $500 out of pocket for that deduction. Keep in mind, anytime that you are contributing to an employer-sponsored retirement plan, you are adding other benefits such as health insurance, dental insurance, vision insurance, all of that is included as a deduction, thus reducing your taxable income. Speaking of taxes, number 9 is pay attention to taxes. This is a thing that I feel like is overwhelming for many, including myself, but financial management software, tax planning software, can help you understand those tax implications later on down the road. Having that awareness and doing some tax planning, not just during that tax filing season and it's getting closer to the April 15th deadline, but truly taking a look throughout the year and doing some check-ins to see exactly what taxable investments you have, what are some ways that we can reduce your tax burden over time is really going to help you. And Quicken can provide powerful tools to help you get more awareness around this part of your finances, and this is definitely a golden rule everyone should live by. And last but not least, number 10, plan for the unexpected. Whether it's a car accident, a medical emergency, a job loss, unforeseen expenses can arise and will happen in your lifetime. So it's best to be planned and prepared for that. Having an emergency fund with accessible cash at hand is really going to help you navigate those bumps in the road as you are figuring out, how do I make this major car repair? We have to go to urgent care for this infection. Whatever it may be, you want to make sure that you have the cash ready to go so that it doesn't derail your budget, but rather bolsters you during unexpected times. Okay, so those were the 10 golden rules of financial management. Did I miss something? Let me know in the comments, and I'd love to know, what are you using to manage your personal finances? Is it a spreadsheet, a journal? Is it a budgeting app? Don't forget that Quicken has a suite of tools for you to use, including the Quicken Simplify Budgeting app. Personally, one of my favorites, but maybe I'm biased. You can check that out by using the link in the description box below. And don't forget to subscribe to the channel for more financial tips and tricks, and we'll catch you in the next one.